Thank you all for joining for tonight's training. This is going to be an epic training and a very timely one, because if you've been watching the news, you've been seeing what's going on, this is your time. When I say that, what do I mean? Well, this is your time. This is the opportunity that some of you have been waiting for your entire life. This should be the biggest opportunity of your life. I mean, imagine being able to take the DeLorean back to 2008 or 2009 to buy everything back then. Well, what if you had that repeat button and you could just hit it? And that was the opportunity in front of you. Well, it very well may be. So today's training is not going to be about doom or gloom. It's not going to be about the bank failures. It's not going to be about the stock market going down a couple hundred points today. It's not going to be about the debt ceiling. That's just hocus pocus nonsense. You know what's going to happen. Today is going to be tactful, about things that you need to know about. And it's also going to be about things that you might have never had exposure to, but you need to. Matter of fact, tonight's training is all about you taking back control of your money. That is it. And how we do that is we teach you to become your own bank. And there's a lot of ways to do that. And we're going to hit a couple of them, but I think you'll all agree. There's a lot to cover here, a lot to unpack. There's just no way we're going to be able to get all that out in 45 minutes to an hour. Could you guys all agree with that in the chat? Do you agree that that's not enough time? So what we're doing is we're doing 3 days of trainings. That's right, 3 straight days where we're going to dive deep into each one of the high-level topics that we hit today. And I want to invite each and every single one of you. We'll be talking about this through the whole training, but I just wanted to preface it that I can't give you everything you need in 1 hour, a little bit less, but I certainly can give you everything and then some in 3 days, which is why we do the 3-day Money School Essentials. It is our #1 training. It is the #1 attended training we do, and it is the one that has the absolute most amount of testimonials. So all of you should join us. It's going to be next weekend, Friday, Saturday, Sunday. We'll be putting the things up. We got a bunch of offers, so don't ask for the link yet. Just pause. We'll get there in just a moment. But let's just kind of talk a little bit about some of the things. Now, many of you know my story. Some of you are brand new. How many of you are brand new, have never seen us, have never been on one of these trainings with Stephen and I? In the chat, if you can just put I. Okay, so we got Tina's new, coming in hot and heavy. All right, great. So we got a lot of new faces. So I don't want to spend and waste a lot of time giving my background and Stephen's background and kind of what we do. Just so you know, both Stephen and I, we were both financial advisors. I was an advisor from 2003, early 2003 till 2018. Stephen spent many years as a financial advisor as well. And when we were advisors, we learned a lot, but we also didn't learn a lot. Matter of fact, we learned what they, Wall Street, wanted us to learn. And we learned what Wall Street wanted us to sell, which is probably the same thing that almost all of you, especially those of you that are new, that's what you know about. You know about traditional financial vehicles. And usually that's it. Some of you may have heard about like hedge funds, but you're like, oh, those are for the big guys. Those are for the wealthy. You might have heard about private banking and you're like, I don't know. I heard about that. The Rockefellers and the Rothschilds, that's good, but I don't think I'm there yet. You might have heard about private lending and being the bank. Well, maybe I could do that, but it sounds risky. Wherever you're at, whatever you do, as long as you understand the basic fundamentals, and the basic fundamentals of investing come down to this simple thing. There's a couple rules. So let's just get the rules out. If you're taking notes, please write these down. Rule #1 for investing, as Warren Buffett puts it, the #1 thing, if you want to make money investing, is buy low. So just write that down. I know this is elementary, but we're going to start just like Michael Jordan. We're going to start with the basics. Every time Michael Jordan walked on the court, he went to the basics. Well, that's what we're doing. So step 1, buy low. Our stock's low right now. Is real estate low right now? That's to be argued. Some of you would say, well, it's lower, but I would say it's not low enough. So we got to wait and we got to be patient and we got to use logic, not emotion. So to buy low, it's going to require you to be patient and it's going to require you to execute a strategy that you will then implement when the timing's right. And I'll tell you when the time's right. Step #2, sell high. Very simple, right? Buy low, sell high. You've heard this a million times, but why don't you do it? Why don't most people do it? Why didn't I used to do it? I'll tell you why. Your emotions, that's why. You get wrapped up into the FOMO. You get wrapped up into the people talking. You get wrapped up into the conversation with the Uber driver saying you should be buying this stock and that stock. Oh, and Warren Buffett just bought Capital One. You should buy Capital One. You missed the boat. I'm not saying it's not a good investment. I'm just saying it maybe is the wrong time. Warren Buffett has to deploy capital. You don't. Warren Buffett can lose money and wait it out. You might not be able to. So when you're really looking at the buy low, sell high, you have to take those rules and apply them to your specific needs and goals and time horizon. Because Warren's got a lot of time. Well, you might say Warren doesn't have a lot of time, but Berkshire Hathaway has a lot of time. They can sit on something and wait for it to mature. The average person maybe can't afford or wait for that to mature. And the third rule to investing is don't lose money. Well, I got good news because you can't lose money if you buy low, you sell high. That's just the automatic. So for many of you, when is sell high? Well, you'd have to look at it, and I can't give you the stated answer. I can't tell you when it is the right time, but I would tell you looking at the charts right now might be the high point for the next couple of years. And I'm being dead serious. I know what I'm looking at when I look at a chart. I know support and resistance levels. I know convergence points. You are at a very critical time. Matter of fact, yesterday, before the market closed down today, would have been a really ideal time. You are sitting at a high point for a lot of the stocks. Maybe not techs, maybe not some of the other ones, but for the most part, small and large caps, pretty high. So would that mean you should sell? I don't know, but I think it's worth you looking at it and saying, is this a high point? And if you get out now, why would you get out? Well, so that you can buy back in at a lower point or reposition assets to a different asset class called diversification, where maybe you could make even more. So those are the fundamental rules there. Okay, now let's go one layer deeper. Okay, everybody's got me up to that point. And Steven, stop me if somebody puts a question in the Q&A. And folks, if you guys want us to answer your questions, do us a favor. We got now we have over 200 people. Put the questions into the Q&A. Okay, all questions in the Q&A and I'll hit them. And before I go any further, can I ask all of you a question? I tend to be a bit brash. I tend to be a bit direct, and I tend to just get it out the way I think the best way is. But some people like me to be gentle and some people like me to be direct. So I'm going to ask all of you, we got 200 people. Dexter already put it out there. Do you want me to be direct and tell you what you need to hear, even if the truth hurts? Or do you want me to be gentle and just tell you what you want to be told? Which one is it, folks? Direct. Good. So I'll remember the next time I see one of you at a live event, if you got some spinach in your tooth, I'll just be like, hey, come here. You got a problem. You got some spinach in your tooth, or you got the toilet paper hanging out, the back of your shirt. You don't know you got it there, but everybody else is seeing it, and they're all trying to be gentle and not tell you. I'm going to grab you and I'm going to be like, you have dirty toilet paper hanging out your pants. Good. So everybody wants it straight. So here's what you need to know. The markets are about to fall apart. I've been saying this for a while. I cannot believe the markets have been this resilient, but the beauty is, since the last couple trainings we've done, since the last 3-day training, I will tell you this, the markets have surprised the crap out of me. They're way higher than what I thought they'd be. I can't believe they're at the levels that they are. Literally, the markets are working on these weird things. Like one little thing happens, one little news comes out. We think, and I want you to preface, think that the Fed's going to pause rates and the market goes up. And then the next day they say, you hear some whispering, we think that the Fed might continue to raise rates. The market goes down. You see, the market is based right now on emotions. It's at a very fragile point. So you do need to decide what you're going to do. But I would just say, maybe it's time for you to take back control of your money. And maybe right now it's time for you to look at investing in things that you know, like, and understand, or things that you're going to know, things that you're going to like, and things that you're going to understand. So let me give you one of them. At the 3-day training that we've got coming up next weekend, I've got my buddy Justin coming. Justin is one of the partners in a private hedge fund. Now, whether or not you know what a hedge fund is or not, you can just Google it. This private hedge fund invests in Forex. What is Forex? It's the US dollar, it's the euro, it's the won, it's currency. Okay, the Forex is currency. But they've created an algorithm that allows their computers, not humans, their computers to literally take small little gains throughout every single day. And at the end of the day, they sell all their positions, they sit in cash overnight, and then they repeat the process the next day. Now, if any of you have been following the news and the US dollar and the digital dollar and the Fed now currencies throughout the world, are all over the place. They're up, they're down, they're movement. You know what the best part about all this fluctuation? It creates massive opportunities for an algorithm that is designed to capture those small little gains. How much of an opportunity? Well, can I just tell you, and I'm going to be transparent if you guys can see this, this is my statement. And there it is. I probably shouldn't, but that's my name. This is my investment in this private hedge fund. Now, I'm not recommending or suggesting you should get into this, but you should probably learn about this. I started this a few short months ago, and this period right here is from 4/1 to 4/30. I put 50 grand into this one. I got 100 total into it, 50 from my self-directed IRA. By the way, if you don't know what a self-directed IRA is, you'll learn on the 3-day training. We'll be teaching you all about self-directed IRAs. The same thing as your regular IRA, except for you can take the money and put it into investments like this that normally your advisor, your brokerage, Charles Schwab, TD Ameritrade, wherever your money's at, they won't let you because they can't make any money. Your financial advisor cannot get paid on this. Therefore, you'll never hear about it except for here. So I started with 50 grand a few short months ago. Do you want to know how much money I have now? 57,961 year to date, 15.92%. Let me just ask you, how many months are we into the year? January, February, March, April, May, 5. I'm 15.92% into this year, that I've made on this. Just this month alone, I made 4.38. But you know what? Forget my statement. That's not important. Let me just show you here, and I'm happy to send this to every one of you. So if any of you want this, Stephen, I don't know the best way to do this. If any of you want this to show you the returns, send us right now in the chat or preferably in the Q&A, send your email, and I will make sure that we capture all your emails, and I'll send you what this is, Kearns Capital, okay? Because you guys all have access to this. But here's the returns. Hear me out. And I want to compare these to the S&P 500 because that's how they do it here. If we're comparing to the S&P 500, that's a good indicator, right? So last July, the S&P made 9.11%, July of 2022. This fund, this algo-driven Forex fund, the private hedge fund, made 3.5. So you would have been better in the S&P 500. The next month, in August, some of you remember August, actually, and it wasn't a good memory. The S&P 500 went down 4.24%. Ooh, that's a doozy. This private hedge fund made 3.88, but it gets better in September. Anyone remember September of 2022 was not a good period of time. There was a lot of things going on. The S&P lost 9.34%. Yep, that'll leave a mark, but this made 6.63. October, this made 5.15, but you still would have done better in the S&P at 7.99. November, 5.86. S&P was pretty darn close. December of last year, this did 6.41. It was a very volatile period of time in December. The S&P lost 5.9. Okay. Then January, this did 6.18. February, this did 5.53. S&P lost 2.61. And then in March, they're both pretty close, but this made 5.85 and the S&P made 3.51. So I know, depending on how you were paying attention to the numbers, there's one thing all of you or some of you honed in on. Do you notice how one just was really nice and steady? You know, one of those kind of did this, just sort of started going, I got to get a different color here for you. Actually, here, let's just do it this way because this will be easier. One of those sort of just went kind of like this, right? And then what did the other one do? What did the other one do? Went like this, then went like this, then went like this, then went like this, and like this, and this, and this, and this. Please tell me, which one do you want? Do you want the one that kind of just does this? Or do you guys like this one? I like the one that's about as straight as possible, going the right direction, and that is up. If I'm climbing a mountain, I want to go up the mountain. I don't want to trip and fall down the mountain every single time and then have to climb back up. That would suck. All I'm trying to show you is just ways where you can invest money, just like the wealthy, but have a more steady return. Now, this investment is not for every one of you, but I'm just bringing this up because Justin is going to be talking all about this private hedge fund at the 3-day, and you can learn all about it and ask questions. I just happen to invest in it, okay? And I've been very, very happy. And all of you that, you know, would get into it, I'm sure would have been the same. But that's just one. Let me talk about another thing, liquidity. When I invest money, liquidity is a very, very crucial thing for me to invest my money. Do you know why? Because I can get a better opportunity, because something bad can happen, because Uncle Sam can send me a big tax bill. And you know what I need to pay that tax bill? Liquidity. But if I don't have liquidity, what happens? Well, have any of you ever not paid the US government, the IRS? you don't have the money, so you wait a couple months. Let's just say it takes you 6 months to pay the IRS tax penalty or tax bill that you get. How much do they charge you in penalties and interest for not paying them on time? Does anyone know? It'd be funny if one of you know. Way more than you could ever make in the markets on a regular basis. That's right. It's tremendous. I don't even know how they calculate the numbers, but it doesn't matter because their IRS agents are packing. So it doesn't matter whether you like the bill or not. They got a gun and they got the magic wand saying, I work for the IRS. Don't mess with me. So you just pay it. But you see, liquidity is what would keep you from having to have that big tax bill. Because if you had liquidity, you could then pay the tax bill. I'm not saying that's what you're going to do. I'm just making an example here. This particular hedge fund has liquidity, which is what I loved about it. See, when I got in it, it had liquidity after 3 months. Now it's 12 months, but that's still not a very long period of time. So there's liquidity. When I put my money in places, I want to make sure that I'm going to get my money back in a relatively short period of time. I don't want to take my money, put it over here, and then just leave it sit. I want my money in motion, and I want my money to be able to be put somewhere. Then I want to be able to reposition it if that's necessary. And that should be important for you because that's why you put money in the bank account, right? Many of you are our clients with the money multiplier and what we do there. And I guarantee you, you folks probably put money into those specially designed and engineered whole lives. One of the reasons, liquidity. That's right. You put the money in and then you can just take the money right back out and redeploy it. Yes, you make uninterrupted compound interest. That's the big thing. So listen, I just hit you with some high level things and I hit you with one example. That's just one. You got a lot to understand about things like note investing. You can put your money in notes and get paid really handsome returns, have some liquidity, and also protect your downside because it's secured. You could lend money on real estate. I mean, the Rockefellers said the ultimate is to own nothing but control everything. Wasn't that what the bank does? Well, bad topic, but banks take your money and they lend that money out and they get security, right? So they don't own your primary house. They don't own your duplex. They don't own your multifamily, but they sure as hell control it. Because if you don't believe that, please tell me, if you don't pay the bank, what happens to your duplex, multifamily, your house? Do you own it anymore? Nope. I got a terrible call the other day, and I don't know who this woman was. She got my number on the internet, and she called me up. And she had borrowed money, and I'm not going to use the name, from one of the probably top, known hard money lenders out there. And I know this company very well. She paid them a lot of money to go through their coaching program so that she could borrow from their private hedge fund, so they called it. And she did. Well, she fell into hard times. She put a lot of her own money into her property. And then the property was listed on the market, but it came due. So she called them up and said, hey, listen, can I get an extension? And they said, sure. They granted her the extension. The house still didn't sell. She started calling them saying, hey, can we work something out? Can I continue paying them? They said yes. And then in the mail, lo and behold, after those discussions, what do you think she got in the mail? Can anyone guess? What did she get in the mail from this hard money lender? A foreclosure notice. That's right. Victor nailed it. She got a foreclosure notice. She contacted attorneys. She tried calling them. They won't take her call. The attorney said, there's nothing you can do. You signed this. They can take your house. Imagine being in that situation. Now, I'm going to paint two pictures. Number one, for that hard money lender, that shows they were in control. No matter what she wants to do, they were in control. But on the flip side, it also shows that they were scumbags the way that they did that, and they didn't even work with her. I know in Private Money Club, when you lend money and you work with private lenders, most of them don't want to take your property. They want to work with you. They just want to get paid. They want to win. And winning to them is an interest payment every month. And then when the deal closes, I get my money back. I would never foreclose on somebody if they were communicating with me, if they were still making the monthly interest payments. Matter of fact, I would say, well, just keep making my monthly interest payments. We'll extend it. We're going to charge you an extension fee to redo the note and everything, and carry on. And as long as I can see the progress, I'm fine, as long as I'm getting paid, right? And most of you would be. But you see, the reason I said that is I showed two sides of the coin. I showed people with money, and I showed people that need money. This woman needed money to do the deal. And she got the money from this lender, but this lender really exercised and flexed their muscles about, hey, we're in control, in the wrong way. But I would say, depending on what side you're on, whether you need money or you have money, there's an option. It's called Private Money Club. We're going to talk about that, but we're also on the 3-day going to go a little deeper into private lending. And I'm going to show you the things that I'm doing. I'm going to show you how I look at a deal. Let me just show you one here really quick if I can, Stephen. And then I'd like to get into the 3 pillars of wealth, if we can kind of go there next. I think that's really important. Folks, I was just looking at this today. You know, I go in Private Money Club every day. This is my profile. And I always, sometimes I just look at the forum. You know, the forum's free. You can check it out. But I just go in here and I see who's got deals posted. And a couple of these deals jumped out at me. Number one, all the time I have small amounts of money because of doing the BYOB and having money, you know, going into my policy and then money going out and working for me and then recapturing the money back into the policy. At all given times, I might have 20 or 50 grand, you know, that I can't deploy because I don't have lots of places for smaller dollar amounts. So this one popped up and I really looked at it and I said, wow, 30, and this is rare on Private Money Club, and I want to preface that you can find a $35,000 deal in a first lien position. So when I was reviewing this and looking at it, I mean, it's in Texas. So some of you are on here are from Texas. You might even know this area, Bandera, Texas. So I would do a little more research. It's got all the photos and everything. I can come down here. I can look at the financials of the deal, 22 grand, and it needs 35. After repair value, 85. So the first thing I'm looking at is 85. Now I could come over here and I could go to this launch house folios and I could underwrite the deal and see, is it really worth 85? I'm not going to do that to waste your time. But then I come down here and I can look at his lender packet. And his lender packet, hopefully you can still see this, shows this. Now this is where I got really excited. Stephen, can you see this? Asking 35,000 interest only, ROI 15% annual. 15%? First lien position, 35,000 bucks on a property that's worth 85. Now, I'm not saying you just go for it. You do your due diligence, but like right there, I want to do my due diligence. Exit strategy, buy, rehab, rent, refinance. So it's a BRRRR, you know, and he's got all the information here. You can read through it. I looked at this earlier and you can go through. I would ask for his personal financial statements. Oh, whoops. Like right here, he's got some of the highlights. He's got this. I didn't go this far down in it. I mean, it looks like a cute little Texas house, nothing special. But you could ask him for his personal financial statement to see what's he got. I don't think it's on there, but you know, like that's a lot of information he's putting out there. Like that's a deal like a lot of people would love to find. 15% for 35,000 in a first lien position. Look at one of two things are going to happen. He's going to pay you like everything's fine, and he's going to sell the property or refinance it, and you're going to get your 35,000 back. Now, you know what you're going to be upset with when you get the 35,000? Can anyone tell me on here? What are you going to be upset with when you get your $35,000 back? You're going to be upset that check stops showing up in the mail. You don't want the 35 grand back. You want the check that was showing up every month, that every month you enjoyed and went out there and did something fun. But now you got the 35 back. So that's option one. Option two, this guy turns out to be a scumbag. You didn't do your due diligence on the borrower and he doesn't pay you. As long as you filed the first lien position and as long as you followed the proper steps, which we'll teach you at the 3-day, guess what happens? That property becomes mine. 85 grand for 35. I'm sorry, like I might not be good at math, but that seems pretty freaking good. Like, please, dude, don't pay me my interest and just give me the property. Like finish it up and give me the property. That'd make me a happy man. You ever feel like you don't have control of your real estate business or your money? That's right. The big banks and the institutions, they're in control, right? I know you felt that before. Private Money Club puts you back in the driver's seat. As members often tell us, it's a total game changer. Join the community of like-minded lenders and borrowers by going to privatemoneyclub.com and sign up. Folks, I'm just trying to lay out some of the things that I've learned. I did not learn the things you just heard in Wall Street. When I was an advisor, I learned how to sell variable annuities. I learned how to sell VULs. I learned how to sell mutual fund accounts. I learned how to sell IRAs and non-qualified accounts. But I learned how to sell everything you have all put your money into probably up to this point, or maybe some of you are already like, nope, I stopped doing that. Good for you. But you see, most of us have to learn the hard way that there is another side. If you think that the wealthy are doing the same things you're doing with your money, you got a whole nother world to learn about. And that's what I want to bring to you. But I'm bringing it to you at a very unique time. And this coming weekend's 3-day training is literally going to spell out the reasons for all of these different types of investments. And the number one reason I want you to remember is this word here, non-correlated. Can you just write that down? Non-correlated. Why do I say that? Well, because I want to put my money in asset classes that are not tied to the markets, because I know the markets are going to go down. Okay, I know they are. I just don't know when. And when the markets go down, if I invest in non-correlated things like private lending, private hedge funds that are currency-based, lots of other things that we're going to talk about, I'm not worried that the market's going down. Matter of fact, when the market goes down, chances are I get better opportunities. And then I just take the money from the non-correlated assets when they pay off. And what do? I put them in the correlated stock market assets. But what am I doing when I do it that way? Buying low. And then when the whole thing turns around and goes back up, what am I doing? Selling there, repositioning over here. So that's how I'm looking for it. So Stephen, I'm going to turn this over to you now because I want to talk a little bit about the 3 pillars. But before we do that, real quick, Stephen, can we just, now that we're about halfway through, is everybody liking this? I know we're going fast, but like I said earlier, I said, you guys all would agree that I can't teach you everything in 45 minutes, right?
I just pulled up our list. So I'm tracking this starting right now. So let's go ahead and invite everyone to register for the training. And I know we wanted to give away a couple things for those of you that hop on tonight. Like you said, we registered over 1,000 people for this and you guys showed up. So we decided to give away some of these custom BYOB skateboard decks.
These are all limited edition. Okay, so you can see this one is number 64 of 100. I only made 100 of these. These are hand dipped. Every one of these is completely different. I can't tell you what color you're going to get, but I will tell you, if you sign up tonight, you might get number 62 of 100 of the BYOB deck that you can hang on your wall, give it to your kids, give it for a birthday gift, or never give it up because there will never be another one of these. So you can have one of these. And what the hell, like, how about we do this for the first 10, because I think I've got 10, I've probably got 20 decks, but for the first 10 of you, we'll give you the deck. And what the hell, let's give them a discount too. How much do we want to give them off, Stephen?
Well, it's, yeah, so the training is not much to start with. It's $297. So I don't know, 30%, maybe $100 off. I think that's,
let's give them $100 off. So you get the deck and you get $100 off. And you get 3 days of me, Stephen, and our team teaching you the opportunities that are about to present themselves and the opportunities that are there right now and how to actually implement them in your life to help you and your family get on the right side of what's about to happen.
While we're putting that in, and I'll put the link in there, but just, you know, I have hundreds of these testimonials from the last 3 years of us doing this Money School Essentials 3-day training virtually. And remember, we've done this quarterly now since COVID started back in the beginning of 2020, and it's gotten better and better every single time we've done it. And so just this one from Jeff, this last one, 5 stars, Chris and Stephen bring their A game to these events. The wealth of information shared is staggering. The list of speakers are top notch, which, by the way, we review the speakers each time. We bring in new speakers depending on the relevancy of what's going on with the economy, with the markets, and everything happening. So our experts this time are geared around the opportunity that's coming up later this year as the market comes down, real estate market comes down, and we start to see more opportunities. So it says, who are also experts in their field. I learned so much and was able to implement my financial game plan with family and asset protection trusts, BYOB, policies, corporate structures, and more. This event weaponized my own arsenal to grow my businesses and generational wealth beyond what I was doing before. I am now helping others who are looking for this type of structure as well. And I love when people, you know, share it with other people. That's a great thing. Take the time to join and get ready to learn new things. Just want to share that one right there. But what you're going to do is you're going to go over to this site right here. It's Money School registration, moneyschooltraining.com/registration. So I'll put that in the chat box. And then you're going to go over, and when you register, you're going to use discount or coupon code Summer Start, all one word, Summer Start. We're kicking off summer. And then for the first, what do you say, 10?
10. I can do the deck and the discount for the first 10.
Skateboard deck. So I'm tracking that right now on our sheet. Put that in there. So we'll go ahead and hit that right now. I put the link in there in the chat box, so you guys can hop over there. While you're doing that, I'll read you one more. This is from Dwayne. The 3-day virtual event was awesome. It opened my eyes to untapped resources I had never thought or knew about leveraging, old 401ks and lazy equity in my home. In fact, I would say life-changing for me. I am currently working on my 4th private money deal and a 5th in a few weeks if all goes accordingly. The event was a boost and motivating factor to putting everything in motion and giving me the confidence that I was doing it correctly. I hope to be able to attend a live event or 2 in the near future. Thanks for all you do. So appreciate that, Dwayne.
You know, for those first 10, the other thing that's kind of cool is like if you really do the math, like 297 minus the 30%, so now you're at 197. Those decks cost me $60. Plus, I got to ship it depending on where you're at. The only, and I gotta be careful here. The only place that I got to charge you a little bit more, like we'll figure it out, is Hawaii. I had no idea Hawaii was ridiculous to ship to. Now I understand why everything in Hawaii is more expensive. But if you're in Hawaii or some exotic island, we got to talk a little bit about it. I will ship you the deck, but I might have to charge you a little bit of an upped price on the shipping, because literally otherwise, like, we're paying you to come to the event. But $60, and then usually to ship the deck is about between 10 and I think 15, depending on where you're at in the country. So you can see, like, we're literally just trying to give you this knowledge, and I'm trying to make it so worth your while that there's no reason for you not to come. But I guarantee you, someone on here is thinking to themselves, oh my God, what a great offer. I can't come because I've got this graduation, I've got this birthday present, right? Who here has already got something planned for next weekend? I bet you some of you do. If you do, I got some good news. I've got amazing editors on my staff. So what we do is we record every single day of the training. But we don't just record it. You see, Shauna probably spends, I have no idea how long it takes Shauna, but she goes through and timestamps every single training. Basically tells you that when you get, because we record them and we send you the recordings, okay? So we're going to send you the recordings, and we're also going to timestamp them and show you each section. So if you just wanted to learn about the private hedge fund, you wanted to see Justin, or maybe you just wanted to learn about notes, or maybe you wanted to learn about entities and trusts, each one of those is going to have its own category. You can save yourself the time. You don't have to watch 3 days worth of stuff. You can get just what you need for the time, put the rest in the back burner, come back to it later. But hell, we didn't talk about this, but let me do one more for all of you that can't make it live. We'll give you the recordings. I'll still send you the deck. I'll still discount it $100. And how about I throw in, and I'll do this for all of you, I'll throw in the last 3-day training that we did, which was an epic one. So you'll get the recordings from the last one we did, plus the recordings from this one, plus the deck, and $100 off. I mean, I can send you the kitchen sink too, but the shipping and handling is on you on that one. I mean, like, I'll do all that for you. So if you can't make it in person, sometimes people actually prefer, and we even sell the training recordings because people love to just have the flexibility to go in and just watch what they want. What do you got here, Stephen?
I was just going to say, kind of similar to what you're saying, we'll give them the past recordings. These are past preview events that we did, different trainings that lead into the 3-day. And these are really valuable. I would highly recommend anybody attending the 3-day, watch these videos ahead of time. You can put it on YouTube if you're one of those people who likes to like put it at 1.5 speed or something. I would listen through these first though, because it's really going to set the foundation of what we're going to be teaching you at the 3-day class. It is 3 full days, but it's a lot. And so having some foundational education around, what is infinite banking and becoming your own bank, and how does that kind of set up with a whole life policy, and how do I start controlling my wealth with self-directed IRAs and using my 401k and tapping into equity, because we are going to talk about that in the 3-day, but it's more on the opportunity side. So having some of this foundational knowledge will be helpful also. Not necessary. Don't overwhelm yourselves by any means, but definitely something I would recommend if you have the time to do so. And then the other thing I wanted to add was we've, over the last several years, we've trained a handful of what we call our money mentors. And our money mentors are experts in infinite banking and really follow everything that we teach and implement it in their own lives, and are able to kind of talk with you about that. So something we're going to do for the first time ever is during the 3-day, we're going to have our money mentors available to you to actually call directly right then. Or if you're not free, like during the training, you don't want to miss anything, or in the evening during the weekend, you can just schedule a call right there with them for the following week. And they're going to do a consultation with you to walk through everything that you learned on the 3-day and start implementing this stuff into your life, because you can learn everything in the world, but until you take action, it's kind of worthless. So we wanted to make that as easy as possible. So that's a first for the 3-day training. I'm super excited to see how that's going to work.
And it could be a big mess, or it could just be awesome, because on the 3-day, if some of you are interested in talking to a money mentor about a specific thing, and you're like, oh my God, I got to talk to somebody about this right now, you're going to have the ability to do that. First time we've ever done it. Hopefully it's not the last, but it's definitely hard to coordinate. Yeah, here's some of the speakers we got coming on. Mr. Greg.
Yeah, I mean, just to point them out, Greg Hurleen is the owner of Horizon Trust Company and has done over $1 billion in real estate transactions. So he'll show you how to even, and before I get into Greg real fast and these different speakers, Chris, I wanted to just ask a quick question. Who is this for? I get that a lot. Like, should I attend this training? Like, I'm in a bunch of debt right now. I don't have a lot of money to invest in some of this stuff like Hearn's Capital Fund that you're talking about. Like, is this right for me? Or maybe on the flip side of that, maybe you're approaching retirement, you have a few million in the bank and you don't want to feel like it's too elementary. So like, who would you say this is for, Chris? Maybe a couple examples of that.
Oh my God. It's who is it not for? But it would be for anybody. Can I just say who it's not for? I think the only people that this would not be for are people that are perfectly content with what you're doing right now. Like if you're psyched about everything you're doing with your money, if you love your returns, if everything's working, you're on track to meet all your goals and needs when it comes to money, like this event's just not for you. Like, I appreciate you being on, but it's just not for you. And in this event, and I shouldn't say this, but let me preface this event wouldn't always be the best for people that maybe, are living paycheck to paycheck, that they're literally like everything they make, they spend, and they have no desire to change anything, work any harder, or give up anything to get out of that situation. This probably wouldn't be the best training for you. So just to tell you that those are the kind of people that it probably wouldn't be for, but who is it for? People that don't want to pay as much in taxes, people that want to protect their assets, people that want to learn and figure out how to make their money work for them and earn uninterrupted compound interest, people that want to learn about the investments where the wealthy put their money that is a lot safer, a lot more liquid than other investments, people that want to learn different ways to save for the retirement that gives them control back of their assets, and people that just want to live financially free. I think that's a good start. But I'm sure Shauna would probably be able to say that way more, way better than I could. What do you think, Stephen? And we got a couple people that are saying like they're having a trouble with the discount code and they're having trouble with the authorization. So is anyone having trouble with the registration? I don't want to spend a lot of time on this, but I'll tell you what's going on. You guys broke it. That's what's going on. We've had this happen one other time. If a lot of people are trying to register at the exact same time, you'll get that authorization failed. All you got to do is just wait a minute or two and then go back in and do it. Or worst case, try a different browser. If you're on Safari, maybe try one of the other ones. I don't even know what they're called. I must start learning the vocabulary. Clearly me too, because I don't even know what the internet browsers are called. So different vocabularies, but you can see we're both on the same side of trying to learn.
Yeah, I mean, just today, Chris, I talked to somebody with $60,000 in credit card debt, as well as a lot of other debt that they have going on. We were able to find a plan and get them started with some banking strategies and starting to control some of their other money. I had another conversation today that had several $1 million in the bank, and they flat out told me they don't trust the banks, they don't trust the government, they don't trust the economy, and they need to make sure that money's protected and safe, and they're being very smart with it. And so really both sides of the world are our clients that we work with every day. And that's what I love about the 3-day training is it's the education is so impactful no matter what your situation is. It's stuff you can share with your family, but also the opportunities are for, we have opportunities that are available for accredited investors only. We have opportunities that if you have $2,000, $3,000, $4,000, $5,000, $7,000 you're looking to invest, how you can do that. I'll give you one example. I was talking a second ago about Greg Hurleen will be on the 3-day training with us. Greg will tell you about one of his investors he was just working with that took his self-directed IRA, opened up a Roth IRA. He took $5,000. He learned how to do what's called wholesale real estate investing, which we're going to teach you on the 3-day. Mike, my real estate coaches, are going to be on Sunday teaching you about wholesale real estate investing. So you can couple a strategy of self-directed investing with what Mike teaches you on the 3-day. So 2 strategies you're going to learn on the 3-day. And what this investor was able to do is go out and use $5,000 from their Roth. They made $60,000 on a wholesale deal. So what that means is they made $55,000 100% tax-free because they did so within a Roth self-directed IRA. So how many of you that are maybe a little bit behind in your retirements would like to learn these strategies where you can go out with a smaller amount of money and really start snowballing that and making more and more? Because let me tell you this, you take $5,000 today and you go play the stock market, good luck to you. It ain't going to turn out pretty. So you need to learn these strategies, things that we're doing, things that successful people are doing every single day to take advantage of this market. And you can do it too. So it doesn't matter where you're starting right now. We can all get you going.
Yeah. And I just want to hit one question that just came in. Joseph was saying, will I be able to create the right whole life policy after the 3-day? In a prior webcast, y'all mentioned it's critical to have proper customization. If we need help with that, you bet your butt. So like Joseph, just what we were just talking about with having live money mentors to do calls right then and there. Number one, I'll go through and I'll explain the whole structure of how to build it. Kind of like that video. You might want to go on my YouTube channel, subscribe and watch that video, how to design an IBC policy right before the 3-day. Because then when you talk to them, you're going to be like, hey, man, I just watched Chris's new video. This is the design I think that would solve my problems. That's what I'd like. And the money mentor is going to be like, perfect. Or maybe the money mentor is like, yes, but have you considered this? I don't know what way it'll go, but 100%. We might not go deep into the how to design because I just made the video for that. So we don't want to double dip on how to design it, but we definitely will give you the opportunity to learn how it works. Not only learn how it works, learn how to apply it and use it, and also then just jump right on a call or schedule a call right there and then. One of the things too, because I wanted to make sure I hit 2 more things. Stephen, I know we wanted to hit the pillars, the 3 pillars, but I also wanted to show 2 other things that are really important. So a lot of times,
go ahead. We have part 2 of this preview coming up. I think it's next week. And then make sure you join us for the wealth webinars tomorrow. We're gonna be talking about some of this stuff as well. So we do a lot of free education, guys. Just understand that. Like this 197, like Chris said, after the skateboard, we're pretty much giving this away. This is just a way for us to have you commit and be there on the 3 days. Even if you watch the recordings, you'll send us testimonials after. It helps us grow. But at the end of the day, we give a lot of our best stuff away for free anyway. So make sure you join us for these other trainings.
Yeah, and if you could just hit Marie's question about like only giving the option to pay through PayPal, not credit card. That's the first time I've seen that one. But when we talk about BYOB, and folks, this is one of the prior 3-day trainings we did. Just so you know, I spend probably 8 hours creating all these slides to train for day number 1 of it. I mean, and any of you that have come to them, and a lot of people are like, oh, I've already gone to a 3-day training. Why would I go again? Well, because every single time it's different. There's not been one 3-day training that's ever been the same. It's a pain in the ass for us because I got to recreate everything, but I just wanted to kind of go here. This was a really cool one. And this showed people how, and remember I said, buy low and sell high. Right now, if the markets are at a high point, this would be a good time to kind of maybe take some gains off the table. But let me just give you a quick strategy, and I'm just going to kind of walk you through what we did in this training. This is going to be something I'm definitely going to go through because it's one of the most popular things at the 3-day, but I want to hit it really high. So let's just say you got money in a 401k at work, but you can't take that money out because you're still working there. You're like, oh, I guess self-directed IRAs are off the table. They are, but it doesn't mean you can't use the money in the 401k. Most 401k programs, almost all of them, will allow you to take 50,000 or 50%. That's the rule. 50% or 50,000, whichever is greater. Let's just say you had 50 grand, you had 100 grand in your 401k and you could access 50. Now, what would be a really good return? In the chat real quick, can anyone just tell me what a really, really good return on your money would be, please? Like what would be a desired return you'd want to make on your money? 12, 20, 15, 100. Dustin, we got to get you in that hedge fund because that's about the only way you're getting that. 1.2 million%. Good. All right. Well, let's just go with 20. Let's just pick on 20 and 25, but anything north of 20. Where's the best way that you could make 20+% with no risk? Can I ask you guys that? No risk. Well, let me tell you where. Some of you, not all of you, but some of you have some credit cards. Now, I know these are crossed off. It's a prior training, but I just want you to focus in here on Visa, MasterCard, and Amazon. You know those 3 names. And I bet you there's probably very few of you on here that have one of those credit cards with an interest rate that's less than 20% right now. Most of the credit card interest rates are like 26.99 to 29.99. True or true? With the Fed raising rates, secretly and quietly, credit card companies have jacked up the rates on your credit cards. And you get that long disclosure you're supposed to read, and you never read it, but they have. If we had 50 grand in our 401k and we wanted to sell high, you'd get rid of it. You'd go online and you'd sell all the positions and it goes to cash. Then if you had some credit cards, we would take a loan from the 401k for 50 grand, shown right here. Take the loan from the 401k, We would pay off Visa, which I just put down $20,000 is owed to Visa. They were charging 25% and $350 a month. I'm just making numbers up, but just go with it. We take 10,000, we pay off the MasterCard. 20% was the interest rate, $200 a month. And Amazon was 2,000 bucks, the small one. We pay that one off. That was 15%, $50 a month. Prior to you doing this, you were paying $550 a month in interest only to the credit cards. Okay, it was money that left your family every single month and will never come back. You've now taken a loan from your 401k, which yes, they're going to charge you interest on that 401k. Yes, you need to pay that loan back. Otherwise, they're going to penalize you. So remember the rules. You're going to get charged interest on the loan and you got to pay it back. But didn't we just free up 550 bucks? The average interest rate on those credit cards was, well, I actually did it with the car with 3, but that's probably 20% average, 25, 20, 15. If someone wants to figure the average out, just add those up, divide it by 3, but I bet it's 20%. So we then take the $550 a month that you're no longer having to pay to the credit cards. And what we do is we literally send that money back to your 401k and make the monthly payment back to your 401k. Because remember, I told you that the 401k is going to charge you interest. Let's just assume it's 6%. How much money did you just make by doing that? What was the average? Did anyone figure out the average? 20, 25, 15 divided by 3. What's the average there? I just want to get it right here. Come on, I need my mathematicians. And we are going to answer all your questions, folks. 20%. That was right. All right, there we go. Thank you. 20%. 20% came back, but is that all you made? No. You made 20% by recycling, recapturing the money you were giving away, plus 6% that you were charged in interest on the 401k loan. You see, the interest charged on a 401k loan doesn't go to the 401k provider, doesn't go to your boss, it goes to you. So you literally just made 6% plus whatever your credit card payoffs were, in this case, 20. So you made 26% on your money. You didn't have to work any harder. You didn't have to work any longer. And you didn't have to take on any risk at all. And you just put 26% back in your 401k. Come on now. Did any of you know how to do that? I mean, that seems to me like I've trained on this so many times, but like, was that helpful? Well, we're going to hit that again, but we're not going to just do it with 401ks. We're going to show you how to do it with a specially designed whole life. We're going to show you how to do it with a home equity line of credit. We're going to put all this together. I just wanted to give that. Now, one final thing, because I want to be respectful and I want to get your questions, but I got to do this. I'm all about legacy. You know, I have a 3-year-old daughter. She just turned 3. We were in New York City last week at the Plaza Hotel, did the whole Eloise suite thing. It was amazing, but you know, like that's a memory. So that could be part of a legacy. But a lot of people, when they think of legacies, they think, oh, how much money am I going to leave? What's in the bank account? What's the car? What's the house going to be? Your kids, more than likely, don't want that. Your kids want to be able to fend for themselves, whether they know it or not. So here's what I'm doing for my daughter, if I can. And I want to talk to you that the legacy that I'm talking about is knowledge. Knowledge that will make sure that your kids can live the life that you only dreamed of living because they've got time that you don't have. But they've also got one thing that you taught them 2 ways. Number 1, you told them about it, but number 2, you showed them how you do it, and then you taught them the right way for them to do it when the time is right. This is what I'm doing with my daughter. Some of you may have seen this, some of you may not. Let me make this a little bigger. This is Vivi's specially designed whole life policy. Now, I designed this for when she was 6 months old. Me and Larissa, my wife, put $5,000 away. The number's irrelevant. You can put 10,000, 50,000, or 1,000. It doesn't matter. And I want you not to focus on the early cash value because it's pretty bad because I built this for the long haul. What I want to do is just take you on a journey on how I'm going to use this with my daughter. And this might not be exactly how I use it, but let's just say when Vivi gets to the age where she wants to go to college, Vivi, through her friends, is going to know that she can take student loans out. She might think daddy and mommy are going to pay for her college. But what we're going to teach Vivi is we're going to say, Vivi, you can go to any college you want. Let's go out and we'll go to her colleges. This is if Vivi even goes to college, but let's just play the normal game. And she finds a college she wants to go to. And let's just hypothetically say it costs 20 grand. What I would say to Vivi is I'd say, Vivi, what I'd like you to do is go on and look at some financial loan, some loans, some student loans, and figure out what it would cost to be able to go to this school for mommy and daddy. So she does the work. So she goes out and she figures out, okay, dad, well, it's 20 grand a year and they got loans, which are 0 interest. And then when I graduate, it's like a fixed 5%. I said, great. Here's what we're going to do, Vivi. We're going to take the money to pay for your college every year from your private bank that we set up for you when you were a child. So we're going to take that money from your private bank, 2020, 2020. We're going to charge you or mommy and daddy, like, hey, listen, some of you want to pay for your kids' college, so let's just play that game too. Me and Larissa say, we're going to pay for your college. And what we're going to do is we're going to make monthly payments on each loan that we take at 6% back to Vivi's bank. Vivi's bank financed her college. Mommy and daddy, just because we're being nice, are going to pay for her college, which we probably wouldn't. I'd make her pay for it. But in this example, you see, I don't show that, but I just wanted to tell you that's how I would teach her to do that. And let's say she wanted to buy a car. She's 16. She's got $99,000 that she could use to buy a car. Vivi, what kind of car would you like? Well, Daddy, I've always wanted that 1986 Porsche Targa 6-speed. How much are they, Vivi? 80 grand. Could Vivi buy the Porsche Targa? Is Daddy going to let her buy that at 16? No, but I'm just playing here. She has 99 grand that she could buy that Porsche. And if she bought the Porsche, the one thing she'd have to do is, although she's got the money, she still has to be able to afford the monthly payments. So when I show her the monthly payment and how to calculate it on bankrate.com, she might be like, well, Dad, I don't really want that kind of a payment. I said, well, how much do you want to pay? I can afford $500 a month. So we go out and we find her a $25,000 car. We take the loan from the policy. We buy the car. She makes $500 a month payments. You see, I'm teaching her how to be the bank. I'm teaching her how to be good with money and be respectful that, no matter how much money you have to be able to afford it. So don't overspend on things you don't need. But I'm also teaching her then, sweetie, it doesn't matter how much your car payment is. That $500 a month, every month that you're going to pay back to your bank, that money is available the next day. So every time you make a $500 a month car payment, Vivi, that 500 is in your account. See, I can do this a lot of ways, but let's just kind of go through and show you kind of what the power of time and compounding looks like. So here I showed Vivi taking 80 grand out for college. Then here she's going to get married. I have her getting married at 29. So we need 40 grand for the wedding. So now she's taking loans of 120. Now remember, these numbers do not reflect her repaying her bank at all. She's stealing from her bank, but not really, but she is. Then she buys a house. She needs 60 grand. So now we've taken loans of 180. But see, she had 154,000. She could have taken more than 60 if she wanted a bigger house. But again, Vivi, can you afford the monthly payment to buy that more expensive house? See what I'm saying? I'm teaching her the whole time. I'm creating a legacy that money can't buy. It's called wisdom. It's called knowledge. It's called teaching her something that her friends and the people that she surrounds herself will not understand, but she will continually keep teaching them because that's part of the legacy. You give even when people don't want, you give unconditionally. Then here, Vivi then goes in and she has kids and she takes money out for their college, 30,000. So we've taken 300,000 out. She's got 752,000 in cash value available to use. She's got $1,052,000 earning interest and dividends because remember, even though she's taken 300,000 out, she still gets interest and dividends on all of it because that's uninterrupted compound interest. And then Vivi retires at 64, takes 90,000 tax-free out every single year to supplement her retirement. And at 90 years old, I mean, we all got to graduate sometime, so she graduates. So at 90 years old, here's the math. Between me and Larissa and when Vivi took over, when I'm gone, the premiums put into this stupid specially designed whole life are $398,000. The loans she took out to do all those things that I just showed you, the cars, the college, the retirement, all that, 2.7 million. She had a cumulative cash value of 5.5 million earning interest and dividends, at age 90. She had a net cash value of 2.9 million that she forgot to spend or didn't take enough out in retirement. And she had a net return of $738,000. But when she graduated, her kids, just like the Rockefellers, get $4 million tax-free net. Remember, I've already subtracted all the loans out. She gets $4 million tax-free, and she has that money go into a trust, and that trust seeds her kids' future and their kids' future and those kids' futures and futures and futures. And all Dad wanted for his legacy is Dad wanted me, I'm talking about me, Dad wanted a check to be mailed to every grandchild on their birthday, and I want that check in the memo to say, happy birthday from Grandpa. And that check will pay out to every grandchildren for, I don't want to say infinite, but until the kids stop popping kids out. Like there will be a check that shows up for every grandchild with my name as grandpa saying, happy birthday. What kind of a legacy do you want to leave, folks? I can show you how to do this because I just showed you I did this for my daughter, and you need to be thinking about how to do this for your kids. A legacy is not the car you leave for your kids. A legacy is not the money that you leave in the bank. A legacy is the wisdom you pass down so that your kids and their kids and their kids and their kids and their kids can live a lifestyle that none of us could ever have dreamed of. And one step further, if we don't teach our kids how to change the dynamics of what's happening with money, the tool, we're all going to lose in this game, because the more and more they get us to give up control of our money, the more control they have. And I'm not going to tell you who they are. You can figure all that out. So until we learn how to take back control, nothing will change. So this is your legacy. Think about that tonight. Stephen, how do you want to wrap this thing up? I want to hit some questions for sure, but what else do we got?
Yeah, I just recommend anybody that hasn't enrolled yet, go ahead and get that set up. It should be working now. The technical side, we did crash it earlier. I talked to the tech team, and congratulations to everybody that took action. I'd love to see it. It's going to be an awesome training. So if you haven't had a chance to do that yet, just make sure to head over there and get that set up now. And then, yeah, let's hit some questions.
Definitely. Yeah, just read them off and let's knock them dead.
All right. So Edgardo, and I can hit this, Chris, but Edgardo was just asking, can we explain kind of, each entity that we have going on, like Money Multiplier, PMC, Money School, what that looks like. So
I'll show you how the whole thing works. Up top, okay, you got the GA, which is the Money Multiplier, okay? That's the main general agency. And then underneath that, you've got what you all probably know is Money School, BYOB, okay? That's my company. And then, so Money School BYOB is what you're watching right now. It's all of our training. It's all of our education. It's pretty much all of the money mentors. It's a lot of it. Okay. The Money Multiplier is very similar to Money School BYOB, but we're just an arm of it. Off Money School BYOB, you've got Private Money Club. Why Private Money Club? Because once you exhaust the debts and the cars, you're going to need somewhere for your money to go to work. And why not? Own nothing but control everything. So PMC is the dating site for money. Then we've also got a couple other companies that basically we could kind of go into, which are really just ancillary companies. We've got like LC Holdings. LC Holdings for me, and I'm not going to go into this, feeds my trust. So I've got a business trust. Okay. Then from the business trust, I've got a family trust. The family trust owns my primary residence and pays for the primary residence. The business trust is how we lend money, do real estate. And then, sorry, I'm running out of space. Over here, I've got a private foundation where I lend or I donate money. So like when we were in New York City, that we wrote that whole trip off legally. It wasn't illegal for us to do that. It was our board meeting. It happened to be my daughter's 3rd birthday, and it also happened to almost be my wife's birthday. But we were able to take that trip. We were able to stay in the Plaza Hotel. We were able to eat nice dinners and lunches. I don't eat much, but it was still expensive. And all we did is we talked about the foundation and what we want to do. And then what we did in New York City is we went to this one place. It was a charity that helps cats and dogs, okay, that need help. And it just so happens to be Howard Stern's wife's foundation. And the reason we wanted to donate to that one is because 100%, that's right, 100% of the proceeds go to the cause. So we donated a pretty decent chunk of money while we were there. And because of that, that board meeting and that donation allowed us to write that whole trip off. So that's all fed through LC Holdings. So all of these different companies all have a purpose in what they do and how they're structured and how they're set up. And we will have people like Brent Carlson on the training who, and I think, is JP on this?
He's on the list. So
he's on the list. So actually, okay, so you got Brent Carlson, who will talk about the entity structures, how to structure all your entities. Do you want S Corps? Do you want C Corps? Do you want LLCs? How do you want to do it? And how should you
let me hit that real fast, Chris. So we wanted to, like we said before, we wanted to provide something for everybody, regardless of your financial situation. So when we look at the 3 wealth killers, which we didn't get into tonight, but we will, one of the major wealth killers is taxes. We get taxed to death. So much of our money goes out through taxes. And every money that goes out towards any kind of tax is less money that we have that we can multiply and do stuff and make more money with. And so we want to keep more of those dollars. So if your federal taxable income is below about $200,000 a year, meaning you're probably making, I don't know, $500 to $1 million a year salary, that are above or that are below, Brent Carlson's going to have really cool strategies to save money on taxes for you. Those of you that have federal taxable income above $200,000 a year, meaning your tax bill each year is at least 200 grand, JP is going to be on to teach you advanced tax strategies called 1041 reporting. So that would be for more some of the people making a little bit more money.
$400,000 a year.
A little bit for everybody.
For JP.
Husband's turning 72 this year, has to take out his RMDs. Required minimum distributions from his 401k. What would be a good thing to do with it? I think we should pay down our policy loans.
That would be a great thing, but if you pay down your policy loans, that's not a bad place, because then you're regenerating your policy, and the policy loans, depending on the company, are probably anywhere between high fours, mid fives. So that's like making high fours, mid fives. Actually, one thing, and I don't disagree that I don't like that, but let's say you got the policy and you got the loans. By using the RMD to pay down these loans, you're going to pick up and make that, I'm just going to write 5 to 6% there that you were giving away to the insurance company, but you're also filling back this up. So then when the money gets to be enough, let's just say you get $35,000 from the RMDs that paid back the loans, you redeploy that 35. We just looked at a deal that was 15% first position. And now all of a sudden you got that money going, and then you just take that and you roll that money back in, and you just keep circling the circle over and over again. I think that's a great idea. I think we could talk about some other strategies, but I'd need to know the numbers and more specifics.
Jose said, is it a good idea to take the credit of 4 credit cards that have no interest for 1 year and use that money in a policy or PMC?
I don't like that. No, that's just my opinion. I mean, they're credit cards. So even though there's 0% interest, they're dangerous. And if you're very regimented, that could work. It's just not something I would endorse or ever teach.
Do you recommend putting money up to your match in a 401k and then diversifying the rest, or just take the money the company offers and invest your money in other assets?
Yeah, Lance, this is where I would differ a little from maybe some of the other people in our organization that would say, don't put any money in a 401k. I would say, if you've got the 401k already, and you plan on working at that company longer than the vesting schedule, which is the period of which time you have to stay there before the match is not yours, then I would absolutely put in up to the match, not a freaking penny more. Don't let anyone get you to put more in, just up to the match, but make sure you check what the vesting schedule is. Is it cliff vesting? Is it 6 years? Is it 4 years? And then ask yourself, am I going to stay here longer than that? You never can predict the future, but do you like your job long enough to make it through the vesting schedule? And if the answer is yes, then put in up to the match. If the answer is no, then don't put anything into it. I know some of these are big words, folks, but yeah, just look up vesting schedule.
My kids are 17 and 15. I'm now finally making decent money. I purchased a policy for 60 grand. What do you suggest I do?
Oh gosh, I don't even know where to start and stop there.
I the 3-day and learn about the opportunities. And
come to the 3-day. I mean, my gosh, I mean, what deal should we look at? I mean, I can pull up Private Money Club. We can look at deals. We can look at notes.
We'll do this, Chris. What are your rules of investing? You have to know it, like it, and
yeah. So it's the third law of wealth: protect your wealth, and that is invest in things that you know, things that you like, and things that you understand. So that would be the first starting place. So if you got 60 grand or whatever you got, let's figure out what you know, like, and understand, and then let's find a path to get you into that, and let's try to make it a non-correlated asset.
Is Vivi's example available on a PDF, strategizing the next policy? Thanks.
Yeah, with the Kearns Capital thing here that I told you we were going to email to everybody, you want me to send the Vivi Lucky Jeans too? I think Sean is on here, so we'll send you the Vivi Lucky Jeans illustrations that I sent up there.
All right, I'm just making a list of everything we're sending. Money Club fees to use? Question mark.
So Private Money Club, you can join Private Money Club by going to privatemoneyclub.com, and you can use the forum, which is 100% free. So you can go on, be a free user, and I'll just kind of just show you that real quick. So the forum is available to be used for free. Okay, but what you will not, this is the forum here, what you will not be able to do is you will not be able to go into the deals page and actually lend on these deals. Remember that one that I showed you, the 35 for 15? You will not be able to lend. That is reserved for members only. But yes, you might as well get in and start getting used to people. And these deals, like if you see a deal in the forum, sure, go on. I mean, make it happen. There's not going to be as much info, so you're going to have to spend a little more time doing the due diligence. If you wanted to fully come on as like what we call a premier member, the cost after you could do 833 join PMC, which is the number to call. And they'll probably discount you down. It's $14.97. If you're really nice, they might give you a slight discount and bring you below that.
Yeah, Eric was asking, how does BYOB work for a 50-year-old? That's young, really. I
Freaking
mean,
perfect.
several
Yeah.
policies for
Most
people.
most of them at 50, like you're a young buck at 50. I
Yeah.
mean, we got clients that are in their 70s and crushing it with this.
Should I get all my money out of the stock market?
I can't tell you yes or no, but I think the signs are everywhere. Just go find that song on Pandora. Signs, signs everywhere, signs, and then open the news, and then you can make the decision there. I'm not going to tell you what to do on that one, but yeah, do that.
I have an annuity that I can turn on the income of 15,000 a year. What can I invest that money in?
I would, if it was an annuity, which means it's qualified, even if it's not qualified, you take the 15,000 out. I'd take the 15,000 here. I'll just show you what I would do. I would take the income from the annuity, and I would put that money into my own policy. So you got 15K, which would be a really great policy. Then once that money goes there, and I don't know enough about your circumstances, but I'd be finding an opportunity over on this side. If it's paying off debt, maybe pay off your car, maybe invest or lend. Sorry, I'm writing fast. And then I would take the money from the policy, put it into the opportunity, take the interest and income from the opportunity, put it back into the policy, keep it going, and make a spread the whole time. That's what I would do. The annuity puts the 15 into the policy. The policy is now that 15 grand every year, gets to grow tax-free and gets to grow with uninterrupted compound interest, while you then get to move that money and have it make money a second time. Because remember, it's not your money that's coming out of the account. The insurance company is advancing part of your death benefit up to the amount of cash value you have. So if you had 15,000 in cash value, they'd let you borrow 15,000, but the money that's actually coming out is not yours. They're advancing you your death benefit and collateralizing it with the cash value in your account. But that means your money still all continues to earn interest and dividends. There isn't an annuity in the world that can do that for you. Eat your heart out, annuities.
What do you do with the extra if you're putting more than the max into a 401k?
Rinse and repeat this, except for let's cross annuity out and let's put 401k extra. So back down to the match and then take the difference, throw it in here, rinse and repeat what we just talked about. And we're going to go deeper into that at 3-day training, day 1.
I'm already fully vested now. How does that change the investing strategy?
It really doesn't. I mean, Lance, if you like your job, just keep putting it up to the match. But because you're vested, that just means if you leave tomorrow, if you wanted to, take your money out, you get all the match money that they gave you. So you just don't have any strings attached to the match money now.
Our IUL is a good idea right now, hoping to borrow against them and reinvest.
Please don't let me answer this.
No.
I'm just going to say no. Big, old, fat no. The lies that are being told about IULs and the hypothetical returns and the past performance returns that they're trying to sell these things on are painting the most fictitious hallucination of what it's going to be in the future. Anyway, Cecil, I have so many videos on my YouTube channel about whole life versus IUL, live case studies with one of our own, Devin Burr, who bought IULs because the sales guy told him that whole life was crap and IUL was the way to go. Just watch his case study on why that was the wrong thing for him to do. And he just got rid of his IULs, took a huge loss on them because that advisor lied to him. And because of that, he took a severe loss. I mean, tens of thousands of dollars in loss because of what the IUL didn't do that he was told it was going to.
So I'm just going to say this, guys. I have a lot of policy questions coming in. We will have our money mentors on standby at the 3-day. If you want to talk before then, just email me and we can discuss specific questions about a policy, like how much do I fund with? How am I going to use it to pay off debt? Like that stuff we need to get on a phone call and talk about your personal situation. So Lynn, please just email me or wait for next weekend and we'll get in deep on that stuff.
I love it. Michael Johnson said, look at it as a scenario where I die and my wife gets a death benefit of $1 million. I might be reading it wrong, but believe me, Michael, if you die and she gets $1 million, she'll be just fine. And she'll probably find a nice guy that'll take care of her for the rest of her life. I'm just joking with you.
Yeah. Ernest, good luck. Private funds, where are the private funds such as Safari and Initio? Are they available on Private Money Club?
They will be on PMC when we finally get the accredited investors page open, but that's probably not going to be till the end of this year at the earliest. So if you're interested in learning about the private funds, what we'll do is we'll just book a call and we'll get you the information, and then you can decide which one. Safari is closed though. Safari is no longer open. So we punched that one out. So now really the only one we have is
one more month.
Initio.
Inicio's almost closed too, though.
Is it really?
Yeah.
Another month? Wow.
Something like that. Unless we can extend it 3 more, but I'm not sure. I'll just put my email one more time if anybody needs help on that.
Victor, I think we just jump on a call about that one because that's a unique scenario. How do you get started? And if you don't have much in credit card debt, we would just look at the rest. Yeah. What is TMM? The money multiplier. We just use abbreviations.
How do you find a tax pro or accountant? Yeah, come to the 3-day.
That's a really good question though, because like he's right. Like, how do I find somebody that understands this stuff? The real answer is good luck. Well, the right answer is when you come to the 3-day, you'll meet them because we have them, because we've sourced them out. Not only that, we have a fractional CFO who is a CPA that actually doesn't just understand them, uses every bit of what you're learning about and what you're going to learn about. So you might want to hear Zach talk. I think he's the 3rd day, Friday, Saturday, Sunday, Chris. That's next Friday, Saturday, Sunday. Sorry. Wanted to make sure I was clear on that.
How is it compatible with velocity banking? Does the policy replace the HELOC?
No. Joe, we have Joe, and I'll probably have him on the 3-day as well. He's an expert in velocity banking, but he uses the HELOC. Then he moves the money to the policy, and then from the policy moves everything so that his money's always making him interest and dividends uninterrupted. So great question. Velocity banking works really well with the infinite banking concept. You just got to have somebody that knows how to set it up properly.
Holy cow. I think that was a record for questions. And I think it was a record for breaking the system.
And can I just add that I had a client who did borrow the max $50,000 from their 401k, used it to pay credit card debt. I had to remind them that the loan had to be fully repaid. You remember, I did say that right in the beginning, in 5 years, which means the monthly payment was more than their total to the credit card companies. The problem they ran into, though, was their spending habits did not change. Yeah, I mean, that's a tough one. I mean, listen, you can't, if you got yourself into a problem and then you get yourself out of the problem, you got to change the way you use money and some of the patterns. But that's right, James. I mean, one of the big problems is we can help people get where they need to be, but it's kind of like somebody that's, that's maybe a little short for their weight. Like they can work out, run and do everything and lose the weight or eat right. But then if they just start eating crappy again, they're just going to put all the weight back on and they're going to be too short for their weight again. I mean, that's a mindset problem that I don't really know if I have a solution outside of they just got to stay around the campfire or have somebody hold them accountable. Yeah, I get it, James. It's definitely not ideal when somebody can't break their bad habits and actually, sacrifice something. I've seen that happen as well. Yeah, Quantum RE will be on. So he'll be on the training in the 3-day. So we can talk about that there. So one last time, that is the offer that we're giving you. So $100 off for the first 10, which those are probably gone. You got a free deck, but then the recordings, and also we're going to give you the last 3-day recording as well. So you get both recordings, all edited, all time stamped, plus the $100 off. You're welcome, everybody.
It's next Friday, Saturday, and Sunday.
Yeah. So I'll see some of you tomorrow. We'll see you at the Wealth webinar. Maybe we'll see you on WTF. Maybe we'll see you on Ask Me Anything. Maybe we'll see you on the advanced TMM training. A lot of you had questions about the money multiplier. Join us tomorrow night. That is all money multiplier stuff, all BYOB, and we're going to go deep into that. So folks, thank you all for joining us. It was a real pleasure to serve every one of you. Thank you for what you did, which is give up your time, your effort, and your energy to learn something new. We'll see you tomorrow. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.